Yeah, the bearishness is really around the global economy. It is slowing down a lot. Europe is slowing down almost to the point where we were in 2012 when Draghi said whatever it takes. There's a big problem outside of this country. And the question is, does it come to the U.S.? And I think the answer is yes. I'm afraid that the Fed boxed themselves in. They're going to do what Wall Street likes to call a dovish hike, which is code word for they're going to raise rates and immediately apologize for it. Well, if you're going to do that, you shouldn't raise rates in the first place, because the recognition is that things are slowing down.
Jim, the direction of travel for Europe is not what you'd like to see, but it's nowhere near the lows of 2010 to 2012, needing Draghi to say whatever it takes. I think the French PMI this week or last week was below 50. It was the first one below 50. The rest still remain above 50 in expansionary
nobody's talking
territory.
about a breakup right now, like they were then.
There are other statistics that are showing that the dramatic slowdown in the U.S. PMI is one of the soft data measures, which will lag a little bit, but some of the harder data measures are really slowing down, like the City Data Change Index, which is at the lowest level since 2012.
So, Kevin, take the bull case.
Okay, yeah, well, we look at it a little bit differently. We look at the fundamentals. I mean, there's two things that are going to drive the market. One is emotion and one is fundamentals. And right now, emotion and uncertainty are trumping fundamentals. We look at where we think GDP is going to go, which we think starting off next year will be in the threes, and then it'll wane down to the mid-twos to low-twos by the end of next year. We look at unemployment being where it's at right now, and by the end of next year being in the low threes, 3 to 3.25. We just don't see a recession coming. We don't see two negative GDP quarters back to back next year. We could see something like that ensuing sometime in 21, late 2020, early 2021. But we're looking very strong at a robust market. We feel that at the end of next year, the S&P could easily be in the 3,000 to 3,100 range.